Welcome back to the Deep Dive, where we help you gain knowledge quickly but thoroughly. Today, we have a really fascinating mission. We're diving deep into the current Israeli real estate market.
And it's a market that is just full of these fascinating contradictions. You've shared a really comprehensive stack of sources with us, brokerage analyses, economic reports, and, current listings for everything from family homes to these incredible ultra-luxury villas.
Absolutely. The goal here is to give you a shortcut to being well-informed, to really distill the economic climate and figure out what it all means for a buyer who's out there searching for quality, vetted properties right now. And the data we found, well, it doesn't tell a simple story.
No, it's actually quite shocking in some ways.
It is. So with that in mind, let's unpack the biggest economic shocker right at the top. How prices and sales volume are, well, they seem to be moving in total opposition to each other.
That's the crux of it, really. That's the whole climate right now. Despite, high interest rates and the situation on the ground, the sources show this remarkable resilience in pricing.
Remarkable is the right word.
Home prices across the country actually rose 5.1% over the past year.
5.1%. I mean, that's growth. And the stability is just astonishing. We looked at that tight window of March and April, and the national average price dip was only 0.1%.
Almost nothing. A rounding error.
Exactly. But then you contrast that with Jerusalem, where prices actually rose over 1% in those same 2 months. It just feels completely counterintuitive.
It does. It does until you look at the other side of the coin, which is the sales volume. And that is plummeting. The sources are very clear on this. April's sales numbers were one of the lowest recorded transaction volumes in 24 years.
24 years? Wow.
And new home sales are down 28% compared to last year. Secondhand sales, they're down 5%.
Okay, so we have price stability, even growth in some key areas, but it's coupled with a massive transactional slowdown.
Yeah.
So the question for us, and I think for you listening, is how is that sustainable? If sales volume is crashing, why haven't sellers just, capitulated? Why aren't prices falling?
And that's where the structural factors come in. And frankly, they're just overwhelming the transactional slowdown. The prices are being held up by these three immovable pillars.
Okay.
First, there's a fundamental chronic housing shortage. This isn't just about current building rates. It's years of bureaucracy, complex land planning.
A lack of readily buildable land.
Exactly. It just takes way too long to get new inventory online.
So even if developers stop selling today, that existing shortage would keep the floor from just dropping out.
Precisely. The second pillar is strong, continued population growth. Israel has a young and growing population base, and that guarantees long-term demand, regardless of any short-term economic turbulence. Foreign investment, it's still robust. The overseas capital buying properties, often for a future move or as a generational investment, that provides a consistent base of high-value cash buyers.
And they're much less sensitive to local interest rates.
Much less. So that structural demand just overwhelms the current high cost of a mortgage.
But let's bring that back down to the ground, to the immediate reality for someone looking to buy, a first home or even an investment property. The financial pressure right now is just crushing.
It is. The financial analysis in our sources really highlights the severity of it. The average monthly cost to carry a mortgage is now 30% higher than the cost of renting the same property.
30% higher.
That shift alone pushes so many potential buyers out of the market entirely, which of course contributes to that low sales volume we mentioned.
And it's not like renting is providing much relief. The average basic two-bedroom rent in Tel Aviv is listed around 7,000 shekels a month.
Which is over $2,000.
Right. But if you actually talk to people living there, they'll tell you that high-quality, desirable places are often priced significantly higher than that. So the pressure is just coming from every angle.
It really is. It creates this very paradoxical market.
So given that high-level economic tension, let's ground this in reality. We want to show you exactly what happens when you enter this market with a globally relevant budget, let's say US $1 million.
Okay, and just to set the stage for these numbers, the analysis we reviewed used an approximate exchange rate of $1 equaling about 3.223 new Israeli shekels. So you should keep that rate in mind as we talk about millions of shekels, because it really clarifies just how quickly that $1 million can vanish, especially in the major cities.
Right, starting with Tel Aviv. It's the country's undisputed commercial and cultural hub, and your $1 million gets consumed fast. We found a listing for a tiny one-bedroom, one-bathroom apartment It was in the central neighborhood of Manim,
How big was it?
only 516 square feet.
Wow, that's basically a small European-sized apartment.
And the list price for that unit was nearly $993,000.
So you're right up against the $1 million mark for a space that size. That just underscores Tel Aviv's ranking as one of the world's most expensive cities.
It's not just expensive. The entry point for ownership is just incredibly high relative to the space you get.
So what if you need more space for a family?
The price jumps immediately. Look at a 3-bedroom apartment. It was about 86 square meters, so 926 square feet in the Bavli neighborhood. One sold recently for over 4.3 million shekels.
Which translates to, what, about 1.2 million US dollars?
Exactly. So we are firmly in 7-figure territory for really modest urban living.
Okay, so let's pivot to Jerusalem. It provides a fascinating contrast. It's generally, and I want to stress the word generally, a bit less expensive than Tel Aviv, but it still commands premium prices.
It does. We saw that a 2-bedroom apartment near the busy central bus station in Jerusalem recently sold for 3.67 million shekels.
So that's about $1.05 million US.
Right. So again, that $1 million budget is still just the entry barrier for a centrally located 2-bedroom.
But if you're looking for the kind of quality, curated properties, the vetted listings you're probably most interested in, the prices climb very quickly into the multi-million-dollar range.
They really do. For example, a 4-bedroom, 115 square meter apartment in Mekorchaim is listed at 5.2 million shekels.
And that's roughly $1.61 million US.
Or, to jump into a really highly sought-after area, a renovated 4-room garden apartment in Old Kataman. It's 93 square meters. That's going for 6.595 million shekels.
Which is approximately $2.04 million USD.
The difference between a basic apartment and a prime renovated property is just immense.
And that price range, really, it's just the beginning. The sources also give us a glimpse into the ultra-luxury end of the market. And this segment seems to operate completely detached from any typical economic factors.
It really does. It's
Uh-huh.
like it exists on another planet.
Yeah.
We saw a listing for a private home in Tel Aviv's historic White City, listed for over $58.5 million.
And then there was that extreme example in Caesarea. It was described as a masterpiece of Baroque and Rococo architecture.
That one was listed at a staggering $210 million.
$210 million.
For a property spanning over 75,000 square feet.
Yeah.
It's less of a residence and more of a small historical principality.
It perfectly underscores the tier of global wealth that's operating in this specific real estate market.
And speaking of wealth, the features of some of the high-end penthouses we reviewed were just exceptional. 6-meter-high ceilings, custom imported finishing materials, things like, genuine Moroccan tiles, Alexandrian wooden doors.
Plus private amenities like dry and wet saunas, a 247 concierge.
These properties are absolutely designed for a global clientele who expect the highest possible standard. So moving on, we really need to look beyond just the 2 major metro areas. The data suggests there's incredible geographic diversity and some intense development activity happening elsewhere.
Yes. While Tel Aviv and Jerusalem dominate the headlines, Jerusalem itself has several prized neighborhoods that consistently attract discerning buyers. The high-demand neighborhoods you see listed frequently are places like Baka, Rehavia, Old Kataman, Nayot, and Arnona.
And just to give you a taste of the character there, you can look at the German colony. It was originally settled in the 19th century by the German Temple Society, which is why it has this unique architecture and historical charm that makes it so sought after today.
So buyers aren't just looking for square footage.
No, they're buying history and community.
And development is focused intensely on delivering luxury within or right next to these areas. We're seeing new, smaller boutique projects like Kataman Vista and the Sharai project, which is right near Sharai Cheesed and Rehavia.
And then there's the massive institutional investment. That huge luxury complex being built right in the heart of Jerusalem.
The one with 1,000 residential units.
1,000 units, 2 hotels, a commercial avenue, an office tower. It's a city within a city.
Yeah.
Plus you have projects like Mitzpe Arnona going up right next to the prestigious Arnona neighborhood.
Okay, let's shift focus to the coast. Netanya is a major area of expansion right now. We're seeing whole new neighborhoods taking shape, particularly Yamim Hatzira, which is adjacent to the popular Ir Yamim and Ramat Poleg areas.
And the plan, Sharat Hayam, is being advertised as this meticulously planned, brand new beachfront neighborhood. The interesting takeaway here is that some of the early pricing in these new expansion areas, like Yamim Hatzira, is being compared to the entry points of Ir Yamim 15 years ago.
So that suggests that the early stages of planned growth might be where the genuine investment opportunity is.
It might be.
Now, you contrast that opportunity with nearby Kfar Shmaryahu, which is still this haven of ultra-luxury. We reviewed listings for modern villas there priced over $40 million. I mean, featuring these extremely high-end details like bluestone flooring, ethanol
Our
fireplaces.
20-meter infinity pool.
Right, that area just solidifies the idea that certain geographic pockets are simply immune to typical economic constraints.
Finally, let's look at Ramat Beit Shemesh, or RBS. This is a really critical area outside the major city centers, and it's often focused squarely on family living and strong community bonds in neighborhoods like Ramat Beit Shemesh Aleph and Nef Shamir.
And RBS offers a lot of variety in larger format properties, duplexes, cottages, multi-room apartments, often with private gardens. While the prices aren't cheap, they do provide a much lower entry point for size compared to Tel Aviv or Jerusalem.
What's the range there?
Multi-room properties are listed between 2.5 million and 5.9 million shekels.
And a key draw for many buyers, and the sources mention this, is that a lot of these larger homes are built with the potential for incorporating separate rental units.
Right, offering a future revenue stream.
So we've established the paradoxical economics and the high cost of entry. Now let's pivot to the search itself. If you are the buyer, especially if you're unfamiliar with the local market or you're looking from abroad, the sources paint a pretty painful picture of that initial experience.
Yeah, the initial search process is repeatedly described as exhausting.
Hmm.
And that's largely because local listings are so often out of date or incomplete, or they just lack crucial details.
So you're just filtering through irrelevant or misleading properties, which can consume so much time and effort.
It does. And this pain point is exactly why these specialized brokerages focusing on quality listings are becoming, well, indispensable. Their core promise is to mitigate that chaos through extreme vetting.
How do they do that?
Well, they pre-vet every single property submission, demanding clarity and precision. To make sure you're not wasting your time driving to look at a dark, unappealing property, they require a minimum of one high-quality professional image per room.
That diligence alone must save buyers immense frustration and travel time.
It does, and crucially for the international learner, they offer comprehensive linguistic support. We see translation services available in English, French, Hebrew, and Russian, so you can understand all the nuanced legal and physical details of a property without just relying on Google Translate.
And they streamline communication, right?
Right.
Allowing direct contact with owners via phone or WhatsApp.
Exactly. Which brings us to the formal structure of the purchase. To give you a clear path forward, the sources lay out a very detailed 9-step roadmap for buying a home in Israel. And this kind of professional guidance is essential.
Okay, let's walk through it. The first step is absolutely non-negotiable. Budgeting. You have to factor in all the costs above the purchase price, attorney fees, purchase tax, broker commissions. They add up fast.
Right. Second, finalize your location based on your personal preference and the purpose of the purchase. Third, you nail down your specific criteria size, outdoor space, what you need.
Fourth is selecting a specialized agent who really truly understands those first 3 points.
Fifth is submitting a clear offer. This requires strategy. You always have a plan B ready for negotiation, including detailed payment terms.
And sixth is the most critical, due diligence. This has 2 major components. You need your real estate attorney to review the title, the zoning, the regulatory status, to make sure there are no outstanding claims or listens.
And you need a professional engineer to inspect the physical condition of the property.
You absolutely cannot skip this.
No. Seventh is finance. This means opening an escrow account to secure the funds and starting the official transfer process. Eighth is the official signing of the contract, which only happens after due diligence has produced positive, satisfactory results.
And finally, number 9, the walkthrough. This is the physical handover. You inspect everything from appliances to plumbing, and you formally transfer all the utilities and municipal taxes into your name.
It's a very formalized step-by-step path, but it's one that absolutely requires specialized professional support to navigate all the complexities.
So after all that, what does this all mean for you, the potential buyer?
It means you're entering a market that is defined by immense structural demand. These foundational issues, like the housing shortage, population growth, they keep prices stubbornly high. They create a floor beneath the market, even when transactional volume is low because of borrowing costs.
So preparation, a clear budget, and expert-vetted guidance are critical to avoid the chaos of bad listings and navigate these high-stakes valuations. You know, the sources reveal a really telling operational detail about the current climate. Real estate teams are actually seeing delays, specifically in translating and publishing new listings, because employees are currently fulfilling military reserve duty.
And that just underscores the national commitment that's in play right now.
It does. So the key question for you, the future buyer, is this. How might this highly unusual combination of extreme underlying structural demand paired with these real-world operational delays that restrict the flow of new inventory, how might that fundamentally reshape the character and availability of properties in Jerusalem and Tel Aviv in the immediate coming years?
That is something to think about as you start your own deep dive.